TLT stock. This is the Treasury Price ETF on the 20 plus Treasury Yields. My take on this, it's too high. Price will come down lower. That ETF, TLT stock, will follow suit. The Federal Reserve just finished up their meeting just this morning, 12:30 my time here in Mountain Time, United States, reiterating the things that I've been saying all along. This is a very strong economy, number one. Number two, inflation isn't anywhere near that 2% level. And if they were to lower interest rates at these at where the economy is right now, that'd be like throwing some nitro onto a fire. This is a very strong economy. So interest rates really have nowhere to go at this point. The economy is strong. So at this level with the interest rates, there's plenty of time left for the interest rates to work their way into the economy before the Federal Reserve would need to do one thing or the other. The economy is already showing that it can perform where it is right now. Given that, I'm selling TLT stock. I'm selling options, call options on TLT stock. This is one of my favorite kinds of trades. I'll be selling those calls on TLT stock, but probably also be nibbling and buying some puts because I think we're going to see a reverse on TLT stock. Price will move lower. Interest rates will follow suit. I don't think that the stock market is going to sell off too terribly much. It adjusted a little bit towards the end of the day, but the economy is strong, which means the revenues for companies is going to continue to be larger. Let's jump into some of the charts. I'll show you what I'm looking at following the economy, how the consumer is pushing it along, as well also the stimulus programs that Biden pushed through, still having its effect in keeping the momentum of the economy moving forward. Probably the biggest factor right there. Doing that at the time that the Federal Reserve was pushing up interest rates. Let's jump into some charts. So the Federal Reserve just finished up their meeting this morning, 12:30 my time here in Mountain Time, United States. They don't see interest rate movement downward in March. They kind of reiterated this, but I've been saying this for a couple weeks, if not months now, that I just don't see interest rates moving lower. The economy is still very strong. Now keep in mind, we've had the stimulus program that Biden pushed through. That's still playing out, and the effects of it are still playing out. And until that wears out, those effects won't deteriorate the economy anytime soon. So that's one key variable. This is propelling the consumer forward. The consumer is 70% of the U.S. economy's sort of growth. If the rate of growth of incomes for the consumer increases, so does their expenditures. Despite the big inflation pops we've been seeing, we are seeing inflation moving lower. Not quite there, just sub 3% on the PCE core. And there's still a lot of time. It may be that towards the end of 2024, the PCE core index still has not hit 2%. I've been saying that for a minute. The problem is those stimulus programs. Should the economy continue and accelerate even further? We had retail sales, 0.6, 2 months in a row, very large numbers. The consumer is not letting up. GDP numbers, solid. This Friday we get non-farm payrolls. Expect that to be a solid number as well. Given that, the Federal Reserve has no ability right now to be lowering interest rates. That would be like throwing lighter fluid on a fire that's already blazing. There's no reason for the Federal Reserve to lower interest rates at this time. I've been saying that for a minute. Given that, here's a look at the 10-year Treasury yield. It went down. Yield went down. And I was actually a little surprised at this because my expectation is that the opposite would happen. Yields popped up to about 4.2 just a couple weeks ago, just prior to mid-January or something like that. All right, keep in mind that they were much higher through October. Then yields came down all through November. The stock market rallied behind that. But basically what the Federal Reserve said is we're keeping things exactly where they are until we get what we need. The economy is strong. You lower interest rates, you're accelerating economic activity. That could easily accelerate inflation. But for right now, the 10-year yield is dropped a little too much, if you ask me. Stock market itself sold off a little bit because the economy is doing well. Revenues for companies are going to continue to do well again. So I don't see any real adjustment in the stock market. As soon as this mellows out, it's a buy on the dip opportunity because there's still plenty of stocks that are undervalued relative to what the economy can produce. What I'm looking at is interest rates will remain lofty. They'll, from the 4.9 that we just saw on the 10-year, probably pop back up above 3.9%, probably pop back up above 4, maybe stay roughly 4 to 4.25 for some period of time. If inflation continues to mellow out, but we still see unemployment numbers keep staying lower and the economy continues forward, the Federal Reserve still has no reason to lower interest rates. If unemployment starts to drop too much and employment accelerates, the Federal Reserve might have to raise interest rates, something I've been saying for some period of time. This is a strong economy. If the effects of the stimulus programs from Biden wear out, that could really decelerate this economy. What I'm looking for next is, this is TLT stock, and this is the one that I'm playing. This is the 4-hour bar chart. It goes back mid-October. TLT, of course, sold off because Treasury yields moved higher. They're completely inverted. And I like playing TLT stock. And what I'm looking to do now, it's trading at 97, 97.06. It finished up for the day. I looked at 2 weeks out, 100 calls, trading at 27.28, 94 puts, trading at 35. Now, both of those are $3 out of the money. The 35 tells me that the puts are premium over the calls. A lot of people have bid up those puts thinking that this is going to fall much lower. I thought that was very significant. What I'm likely to do is a ratio 2-to-1, selling the calls to buying the puts. The Federal Reserve is not going to be lowering interest rates. Yields will likely remain lofty, so I don't see 100 hitting. Now, if I bring in 27 times 2 and I pay out 35 times 1 for the 94 puts over the course of the next 2 weeks, I think it was February 16th was the expiration date that I looked at. That to me is a pretty solid trade. Half of those options are going to expire worthless on the calls, and I'll just collect that premium. The other half, of course, I use to pay for my puts. So it's almost a zero cost trade. It's going to cost me 7 cents, but I'm selling a ratio of 2-to-1, so I'm taking in far more than that. I'll be taking in a total of about 20 cents on that by selling those 2 times as many calls. Should the market turn, move lower, if my puts accelerate in price, maybe I see 50, maybe I see 60, somewhere in there, I can sell those off at a 15 to 25 cent profit, and then my calls, they expire worthless. I'm making money all day. I'll probably move into that trade looking at tomorrow. But let's keep the economy in mind. Here's personal incomes. I did a pretty decent sized video over this Monday. I kind of evaluated the whole thing and said, listen, we just got GDP. We just got a bunch of these numbers, but let's reiterate some of the things. This is personal incomes. As Americans earn it, they spend it. This is the rate of growth of personal incomes. Year over year change. We're starting to see an acceleration in personal incomes. 2 things. Number one, people are coming back to the payrolls, which means more people are contributing to the total dollar amount in personal incomes. Number 2, those that are on the payroll getting some small raises. This accelerates personal incomes, which of course accelerates personal expenditures. If you want to know how this economy is doing, look at the biggest driving factor for the economy, and that's personal incomes and personal expenditures. We're seeing these numbers popping higher. We just saw GDP. We just saw retail sales. We're seeing a bunch of evidence that the consumer is not letting up. This is really going to drive revenues for companies. So we'll probably see a lot of the future projections I've seen for some of these companies. We're probably going to see those numbers get hit, which means these stocks, there's still a lot of value left in a lot of these stocks. Given that, buy on the dips on some of these undervalued stocks. This will propel the stock market a little bit further. Retail sales. I wanted to kind of show this again, popping back upward. Consumers are spending. Initial claims and continuing claims, those are two numbers you want to kind of keep track of. Although continuing claims is much higher in this chart, if you go back historically, this is an incredibly low number. Simply put, the unemployment rate sitting at about 3.73%, probably going to maintain that level. 3.7% is very low unemployment. If you have that many people on the payrolls contributing to the economy is going to continue forward. Plus, you have that stimulus, despite the increase in interest rates. I'm putting that trade on, selling those $100 calls on TLT stock, buying the 94 puts, or I might tighten it up a little bit. I'll still play with the numbers and kind of see what makes sense. Nonetheless, I see TLT stock, the ETF for Treasury Yields, the 20 and the 30, dump it. Because we're not going to see that 100. So that's an easy trade to rationalize. And I don't know why the 10-year moved like it did downward. It could be a couple factors, and this is probably the biggest X factor out there. What's going on in the Middle East? Looks like things are going to sort of mellow out a little bit, and that's good news. There's also a flight to quality issue. The stock market did sell off. When the stock market sells off, money gets put to work. They rush into the Treasury yields. That would push yield downward. To me, that's a trigger. Dump TLT stock. That ETF, it's overpriced, and that's the way you make money. If you found this video to be useful, make sure to hit that like and follow button. We'll see you in the next video.